Rent growth hits a 15-year low. What does this mean for tenants and landlords? In a surprising turn of events, the latest report reveals that single-family rent growth has plummeted to its lowest level in 15 years, raising questions about the future of the rental market. But here's where it gets controversial. While some cities are still seeing modest increases, others are experiencing declines, leaving many to wonder if this is a temporary dip or a sign of a larger shift. Let's dive into the details and explore what's really going on. A for rent sign stands prominently in front of a Miami home on December 12, 2023, a scene that's becoming increasingly common as rental dynamics shift. According to Cotality, a leading analytics firm, single-family rents rose by just 1.4% in August compared to the previous year. A sharp drop from July's 2.3% increase and far below the 3% average gain seen in 2022. This slowdown isn't isolated. It's part of a broader trend that has persisted throughout the second half of the year, despite earlier signs of strengthening rents. Regional variations, a tale of two markets. While the national picture may seem bleak, regional data tells a more nuanced story. Chicago led the pack with a 4.7% annual rent growth in August, followed by Los Angeles, 2.8%, Philadelphia, 2.7%, and Washington, D.C., 2.6%. On the flip side, Dallas saw rents decline by 0.6%, the lowest in the nation. Cotality attributes this to a surge in new multifamily apartments flooding the market, outpacing demand and driving prices down. And this is the part most people miss. Local factors like construction booms, economic conditions, and even natural disasters, like wildfires in Los Angeles, play a significant role in shaping rental trends. Molly Bosel, senior principal economist at Cotality, notes, Atlanta, Philadelphia, and Los Angeles continue to show stronger rent growth, with Los Angeles now only slightly above its pre-wildfire level from January. This highlights how local conditions can still influence rental trends, even as national growth moderates. High-end versus low-end, who's winning? Interestingly, high-end properties are faring better than their low-end counterparts. Annual rent growth for luxury homes stood at 1.6% in August, while low-end rents increased by just 1.1%. Both figures are significantly lower than last year's gains, but they underscore a persistent gap in the market. Could this be a sign of growing inequality in the rental sector? It's a question worth exploring. Multifamily apartments, the cooling effect. The multifamily apartment sector isn't immune to this slowdown. A construction boom has delivered a record number of units in recent years, and the oversupply is now catching up. Nationally, apartment rents fell by 0.8% in September compared to the previous year, according to Apartment List. While this decline is slightly less severe than August's drop, it marks the fifth consecutive month of negative growth. The national vacancy rate hit a record high of 7.1% in September, further evidence of a cooling market. We're past the peak of the multifamily construction surge, but new units are still entering the market, and vacancies are trending upward, Apartment List researchers explain. The median monthly rent in September was $1,394, down $11 from the same period in 2024. While rents are now below their August 2022 peak, they remain 22% higher than their January 2021 level, a reminder of the unprecedented growth that preceded this cooldown. The bigger picture: what's next for renters and landlords? As the rental market navigates this period of adjustment, both tenants and landlords are left with pressing questions. Will rents continue to fall, or will they stabilize? How will regional disparities impact local economies? And perhaps most importantly, what does this mean for housing affordability in the long term? We'd love to hear your thoughts. Do you think this slowdown is a positive development, or are you concerned about its implications? Share your opinions in the comments below, and let's spark a conversation.